IVM.
Hello ladies and gentlemen, my name is Paritosh Anand and this is Finance Flashback, brought to you by ICICI Prudential Mutual Fund. Our podcast dives into the lessons from the past to help you make informed financial decisions for a brighter future. Well, it leads to the topic for today, which is commodities. Commodities are raw materials or primary agricultural products that you can buy and sell. Think of precious metals like gold and silver, energy resources like oil and natural gas, or agricultural goods like wheat. They're the essential building blocks of the global economy. Now, how can you actually invest in these commodities? There are several ways. You can buy physical commodities like gold bars or oil barrels, although this can be impractical for most investors. Another way is through futures contracts, where you agree to buy or sell a commodity at a future date for a specified price. However, futures trading can be complex and risky. A more accessible way for most investors is through commodity funds. These funds invest in a variety of commodities or in companies that produce them. By pooling resources from many investors, commodity funds can offer diversification and professional management. Keeping in mind that commodity prices can be influenced by global supply and demand dynamics, geopolitical events, and economic trends. It's an intriguing area to explore. So let's dive right in by exploring some interesting historical examples. India's deep affinity for gold is a story passed down through generations, symbolizing prosperity and purity in the Indian culture. As early as 3000 BC, India was renowned for its wealth in gold. It adorned temples, was intricately crafted into jewelry, and served as a currency in bustling markets, symbolizing prosperity and wealth. They called India Sone ki Chidiya, the golden bird, a testament to its wealth and influence. The ancients recognized gold as a timeless investment. Its significance peaked during the Gupta era, around the 4th and 6th century, when coinage system introduced coins like mohurs and dinars, the symbols of power and status coveted by kings and nobles alike. As history progressed, gold investment evolved. During the Mughal dynasty, gold became a financial powerhouse, with systems like Zabt and trade taxes bolstering ties to Iran and the Ottoman Empire. In modern times, ladies and gentlemen, gold has proven its value time and time again, particularly during turbulent economic periods. During the 2008 financial crisis, for example, global markets were in turmoil, yet gold emerged as a sanctuary for investors. For those looking to diversify their investment portfolios, considering metals such as gold and silver can be a prudent strategy. You can consider options such as investing in mutual funds that invest in gold or silver, or maybe in precious metal, offering professional management and liquidity. Another viable option is ETFs, or exchange-traded funds that invest in gold and silver. Each unit of a gold or silver ETF typically equals ownership of a fixed quantity of the metal, providing flexibility and cost efficiency compared to physical ownership. These funds track the prices of the metals, offering indirect exposure without the need for physical storage. Additionally, sovereign gold bonds, or SGBs, issued by the Government of India, offer another way to invest in gold. They provide fixed returns linked to the price of gold, ensuring safety and liquidity, along with tax benefits such as exemption from capital gain tax on maturity. Let's transition from the rich narrative of gold and delve into another essential commodity that has shaped economies and industries worldwide: energy. The narrative of our energy sources is a saga of innovation and adaptation. Over the last 2 centuries, we've witnessed a remarkable evolution, propelled by human ingenuity and the demand of growing economies. As the 19th century unfolded, the industrial tide turned, and with it came the demand for more efficient energy sources. Coal emerged as the champion of this era, fueling the steam engines that revolutionized industry and became a dominant force in global energy production by the early 1900s. The discovery of oil in the late 19th century marked another pivotal shift. Initially used for lamps before becoming a primary fuel for transportation and industry in the 20th century. Not far behind, natural gas carved its niche, heating homes and powering appliances as its network of pipelines stretched across landscapes. Now, as we stand in the 21st century, we find ourselves amidst an energy renaissance. Renewable resources like solar and wind power are no longer the dreams of visionaries, but the tangible of a sustainable future. This ongoing transformation underscores the enduring significance of energy commodities. They're not just the engines of our economic growth, but also the architects of our future. In India, the story is no different. Energy commodities continue to be the backbone of the nation's development. And just as energy sources have evolved during the time, so should your investment portfolios as well. By diversifying across various commodities, investors can spread the risk and potentially get better results. You can embrace the dynamism of the energy sector through SIP or systematic investment plan in energy-focused mutual funds. This approach not only aligns with the progressive nature of energy evolution, but also offers a structured path to potentially enhance your investment strategy. Remember, the key to successful investing is not just in choosing the right assets, but also in how you manage and diversify your investments over the time. And just like energy, agricultural products have also been a lucrative investment avenue throughout history. In the mid-19th century, as the world's eyes were fixated on the tumultuous events of the American Civil War, a quiet revolution was unfolding in the fertile plains of India. The disruption of cotton supplies from the US catalyzed an unprecedented boom in Indian cotton exports. This period, often referred to as the cotton boom, saw a meteoric rise in the demand for Indian cotton, leading to a substantial economic growth within this region. The surge in exports not only bolstered India's agrarian economy, but also laid groundwork for future industrial development. Just as Indian farmers capitalized on the opportunity presented by the American Civil War, modern investors should keep a watch on market shifts and make necessary investments to their portfolio. These assets often move independently of the stock market, offering diversification that can reduce risk and potential for much better returns. Moreover, commodities respond to supply and demand dynamics, presenting opportunities for astute investors to anticipate trends and act swiftly. They can also act as a hedge against inflation and currency fluctuations. So, as you consider diversifying your investment portfolio, remember the enduring value of commodities. They're not just some ordinary historical relics, but vibrant assets that continue to shape the world as well as your investments. And with that, I'm Paritosh Anand signing off from today's episode of Finance Flashback. Don't forget to tune in next time where we give some financial gyan with an eye on the past. Until then, keep investing wisely and stay golden. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
IVM